We're live.
Okay. Hi, everybody. Sorry for the slight delay. We had some technical difficulties here. Welcome to our webinar on how to safeguard container trading operations amidst the supply chain disruptions now in 2022. Awesome to see you all here. We're joined by Danny Boer from SeaCube, Andrea Monti from Sogese, and our very own Candice from our marketing team, and myself. My name is Christian, and I'm one of the two co-founders and CEOs of Container Exchange. Before we start, real quick, I will have a chat window on the right-hand side, the chat panel on the right-hand side. We encourage you to use this very, very actively to also ask questions and comment on other questions from others in order to turn this into an interactive discussion and not just a front-loaded presentation like in high school. Maybe as a first thing, what you can already comment and what we'd be super interested in, if you write in what kind of challenges have you encountered or are you encountering right now in container trading or leasing with regards to the existing disruptions in the supply chain chaos. Would love to hear from you, would love to read your comments. And there will also be a quick poll going live in just a matter of minutes, which asks you a couple of questions around whether you buy and sell containers, what's your experience there right now, etc., etc. So please do use this actively. Super keen to turn this into an interactive event. Perfect. Now can I click to the next? I don't need to click to the next page. Then right now we'll start with Danny Boer, who will give us some insights into the container trading market from his perspective. What's driving the current disruptions? And yeah, Danny, we're super excited to have you here. Maybe if you can share one or two sentences about yourself, introduce you even better than I could ever do that.
Yeah, thanks, Christian. Well, first of all, thanks for having me. I'm really looking forward to this webinar. I'm Danny Boer. I'm the Director of Sales and Trading at SeaCube Containers, and today I will give you some more insights about the secondary market from our perspective.
Perfect. Cool. So excited to hear about that. Maybe if as a first sort of question and jumping right into that topic, as one of the biggest leasing companies in the world, you trade containers naturally on the secondhand market. Can you give us a quick rundown on how you do that, what your processes are, and what your setup's there?
Yeah, absolutely. Thanks, Christian. When you can put the next slide, please, Valerie. Yes, perfect. Thank you. Yeah, well, as one of the world's largest leasing companies, SeaCube has a total owned fleet of approximately 760,000 units, whereof 64% refrigerated containers. And most of these units are on a long-term lease. And units that we nominate for sale will be disposed into the secondary market. Drivers or motivation to sell equipment into the secondary market could be age, condition, or location. And usually we sell our equipment at an age between 11 and 50 years. Next slide, please. As you can see on this slide, SeaCube has a global reach with sales activity in 271 cities worldwide. And over the last 10 years, we have disposed around 300,000 units in the secondary market. Considering the size of the market, as well from a profitability perspective, we recognize the secondary market as an important part of our business model.
Very cool, very cool. Thanks a lot for this. And what's currently happening in the market, especially in the secondary trading market?
Well, on the next slide, you can see the global fleet size, and I think it's good to have a look on this first. In 2021. The global fleet size grew with 15% to approximately 51.4 million TEU. The annual growth the last 20 years was average 5%. So that's an exceptional growth, which was caused by the severe disruptions in global supply chain. But it was also because people shifted spending money to goods instead of services during the lockdowns in 2020 and 2021. And that is also why we have seen a record number of new produced dry units in the market. On the next slide, you can see that equipment owners are selling annually 4 to 5% of their fleet, which is usually 10 to 15 years old. I think that was on the last slide. I think you skipped one slide, Valerie. Yeah, perfect. Thank you. So on this slide, you can see that the equipment owners are selling annually 4 to 5% of their fleet, which is usually 10 to 15 years old. However, due to the strong demand last year, shipping lines, only 400,000 units were disposed into the secondary market. And compared with the 1.6 million TEU that entered the market in 2019, this has been an exceptional low volume. Next slide, please. Since the 80s, we see that the secondary market is developing, and from a profitability perspective, it's an interesting market for equipment owners. And it's also an important part of the business model. In general, the supply into the secondary market always kept pace with demand. However, due to small volumes in 2020 and 2021, demand exceeded supply significantly, and that caused a surge in pricing. Supply into the secondary market is primarily driven by the level of success from shipping lines. If shipping lines have high demand for equipment, less units are being disposed into the market. When shipping lines have soft demand, or they can replace equipment for attractive priced new equipment, they will accelerate disposals into the secondary market. And 2020 and 2021 have been good examples where shipping lines had very strong demand and where we have seen very low supply into the market. Next slide, please. Yeah, currently we see that the market is extremely volatile. We see softening in demand, and we see also downwards pressure on prices for both new and used equipment. And this is driven by the situation in Ukraine and COVID lockdowns in some parts of Asia. While in other parts of the world, we see easing restrictions and people shift spending money to services again instead of to goods. And that causes also some softening in demand as well. But of course, as also global inflation, the port congestion and labor issues are causing uncertainty on the secondary market, and buyers are reluctant to buy on speculation unless it's competitively priced. And as you can see on this slide, you can certainly see the negative downwards trend in terms of pricing for both new and used equipment. And the period that is red circled is the period before COVID, which was basically the start of the severe disruptions in global supply chain and led to the significant surge in demand. However, the current resale prices for used equipment, but also for new, are still significantly above the average level of the last 20 years. And for equipment owners, it's still favorable when they sell equipment.
Okay, and if you look at sort of, and this is a question that we regularly get from our clients on exchange, but also from outside interested parties, sort of whether we can pinpoint the exact impact of the developments in Russia, Ukraine, the Shanghai port lockdowns, et cetera, even like congestions on the Trans-Pacific trade, big vessels piling up before they enter the ports on the US West Coast. So what are the immediate impacts of these disruptions that you see right now, and how do they impact supply, demand, and the prices?
Right. Yeah, well, yeah, each of these events impacts us differently. Next slide, please.
Sorry.
Yeah, thank you. Yeah, so, well, the global supply chain will be tested again, that's for sure. And it's causing uncertainty on the market. The lockdowns and the zero COVID policy in China lead to softer demand in the short term. And we see also a negative downwards trend on resale prices. The longer term outlook is uncertain. And the situation in Ukraine, which you can see on the next slide, will impact economic growth and will impact the global supply chains again. Global inflation will jump above 6% this year, and also the global growth will take a hit. Due to the strong demand for equipment, SeaCube has been successful in renewal of expiring contracts in 2020 and 2021. And this has also impact on the number of units that we are disposing into the secondary market. So from a trading perspective, it is still difficult to meet customer requirements, basically due to lack of inventory, which is for a leasing company, of course, a luxury problem. But it causes some availability issues.
So I said we talked about the decrease or the recent decrease and softening in prices. And you highlight here the ongoing disruptions of Russia, Ukraine, the COVID lockdowns in Shanghai. Where do you think prices will go in the short to midterm based on these ongoing disruptions?
Well, that's hard to say. It really depends on how long the situation in Ukraine will continue and how long the COVID lockdowns in Asia will continue. So, in the short term, we definitely see some pressure on prices. We see more units being disposed into the secondary market in Asia. But it really depends how long the situation will continue in China. So it's really difficult to predict what prices will do. We could also see an increase in prices again when China is up and running again. It's very hard to say, and it really depends on how long the situations will continue.
Gotcha. Yeah, I think this is also in line with what we see and what we expect. Essentially, what COVID and these supply chain disruptions have done is extend the time that it takes for a container to move cargo from A to B. And if you extend that time period and you have the same amount of cargo to move, then you essentially just need a bigger fleet to manage this. But over time, if those disruptions go away, then suddenly you have that surplus of containers and a crash in prices.
Exactly.
But of course, this highly depends on what other disruptions we can pile on top of the existing ones.
Yeah.
Okay, cool. And how has this situation impacted your business operations? What have you done internally, potentially to mitigate some of the impacts or to capitalize on some of the opportunities?
Yeah, so as one of the world's largest reefer lessors, we want to make sure that we can meet customer demand and requirements. Our investments and strategy, as well our growth initiatives, are on the refrigerated market. We believe that this market has its highest potential, but it has also proven to be very sustainable. In economical challenging times, people might not buy a new TV, but they will continue to buy food. What we do, we make sure that we have sufficient production line available to meet customer demand, but also to have speculative inventory available for potential spot demand. And from a trading perspective, we had to adapt ourselves to rapid changing market conditions. The biggest challenge at this moment is depot congestion, what causes some accessibility challenges. But at the end of the day, it's the trading customers or the trading community, so to say, who must adapt themselves to new changing market conditions. At SeaCube, we invest in long-term relationships, and we truly believe in relationships with mutual benefit. But at the same time, we also see that deals are becoming more transactional. So we also invest in digital projects, and we started using online platforms such as Exchange to meet customer needs.
I love to hear that, of course. I can't deny. How has this helped you in your operations? And what other flexibility has this provided you with?
Well, of course, it's to have sufficient production line available makes it possible to meet customer demand. So that's for us. That's the goal to help shipping lines when they need equipment. And from a trading perspective, it really opened the doors. When I refer to an online platform such as Exchange, it really opens the door to new potential customers. So by ensuring sufficient production line, we can serve our customers on the leasing side, and to have more focus on digital projects for trading, we can serve more customers.
Okay, cool. Great to hear. And this is in line, of course, with our vision to simplify the logistics of global trade, making it easier to find and work with new partners. So great to hear that you have this positive experience. In general, we want to sort of keep as many questions as possible for the end. But Roger here actually asked a good question that was also on my mind.
Sure.
Because you started talking about depots and depot congestion and that being an issue. How do you expect this to develop going forward, especially in light with potentially increased redeliveries from the shipping line when the need for large container fleets sort of decreases a little bit? What do you see the market developing to? How will you handle this? What do you think is needed to avoid sort of a massive depot crunch?
Yeah, so again, it really depends on how long the situation will continue, especially in Asia. We see now some softening on the market, basically because less export volume out of China. So that takes away some pressure on depots in Europe as well in the United States. But also in this occasion, it really depends how long the situation will continue. What we have done with SeaCube, we focus more on gate-buy agreements with our customers, also to take away some pressure at the depots, and so we have sufficient space available for our leasing inventory.
Gotcha. That makes sense. Yeah, I also heard that or saw our trading team or trading product team working very hard on enabling gate-buy transactions. I think that's a feature that also might help in that. But it's going to be interesting to see how the industry copes with that limited depot space, for sure. Maybe as a last question, sort of from my end, and then looking at the time, I think we also need to slowly but surely move on. What do you think, or how do you expect probably the long-term market trends to develop? Because we mostly now talked about short and mid-term trends.
Yeah. So the lockdowns in Asia. Next slide, please. On this slide you can see the forecast and the share by equipment owner. The lockdowns in Asia and also the situation in Ukraine will impact the global supply chain, and it will cause a supply shock. In the short term, the supply of containers to the resale market is likely to increase as the shortage of equipment in the primary fleet eases, basically. But on the longer term outlook, on the next slide, despite the slowdown in global demand, the container market continues to reflect modest growth through 2026. The disruptions in the global supply chain, but also the backlog of cargo in the pipeline, will continue to set up favorable market conditions for shipping lines, and demand for used equipment is likely to be sustained. So for this year, the GDP outlook is expecting 3.1%. And next year it will be 3.3%, and in 2024, 2025, and 2026 we see a slightly decrease from 3.1 to 2.8.
Okay. So this is GDP growth, and what you're saying is that, hey, in general, we still need trade, we still need the containers. So market conditions will remain favorable, okayish to the market. Yeah. Okay. Good. Perfect. Thank you so much, Danny. This was very, very interesting. I think we'll get back to you definitely with a couple of questions towards the end.
Sure.